Hey there traders, this is Steve minding the market charters for FX Explained in our regular weekly macro watch update for the week commencing the 14th of February 2022. Inflation worries and Russia-Ukraine fears weigh on stocks. Let's kick off with those macroeconomic and geopolitical developments we've seen over the past week. While the hottest inflation since 1982, US CPI data was 7.5% on an annualized basis, above consensus estimates and its highest level for 40 years since 1982. Those inflationary pressures that we've seen coming throughout late 2021 and throughout 2022 are now a real concern for financial markets, and even greater concern reinforced by this data last week. And so the more hawkish members of the FOMC are now indicating a possible 0.5% increase at the March meeting because of this hot inflation, with Goldman Sachs now predicting 7 rate hikes in 2022. On the flip side, the ECB did pivot towards a tightening stance earlier in February, but President Lagarde has tried to calm markets' fears of a significantly more hawkish shift over the past week. And the end of last week saw a big risk-off move and a theme reinforced by the indications from the US that conflict between Russia and the Ukraine could be imminent. Now let's take a look at those global financial market developments for last week ending the 11th of February. Well, on Thursday and Friday we saw a dip lower. Thursday we saw a dip lower in stocks, the S&P 500 giving up much of the week's gains on Thursday and then plunging lower on Friday. Thursday due to that CPI release, and then on Friday because of the concern regarding the conflict in Ukraine-Russia border. US 10-year yields spiked higher on Thursday after that CPI release, with the 10-year note breaking above 2% for the first time in multiple years since 2019, but did retreat lower. Yields did retreat lower as bond markets globally got a safe haven bid, so bond prices rallying, moving to lower yields because of the concerns around that Russia-Ukraine conflict. The US dollar did push higher both on Thursday and Friday, getting us again a safe haven bid because of the conflict on from Friday, and because of the higher yield moves that we saw after the CPI data on Thursday. So getting back some of the losses that we saw earlier in February. Gold spiked higher again because of safe haven quality, and also as an inflation hedge. And oil continues its 2021 rally in here into 2022, extending to another new multi-year high. Copper did try to break out Wednesday through Thursday to the upside. It's still in a bigger, broader range, but breaking above to a new 2022 high, however, did retreat on Friday. Now let's take a look at the week ahead, commencing the 14th of February 2022. Well, we're closely watching for military developments on the Ukrainian-Russian border. Real concerns that a conflict could break out this week. On the central bank side, we had the RBA minutes released on Tuesday, but the big focus for the week is going to be the release of the FOMC minutes on Wednesday. And looking at the data for the week, we have nothing really of note on Monday. We get those RBA meeting minutes on Tuesday, alongside Japanese GDP, UK employment, EU GDP, the German ZEW survey, and US PPI. Wednesday brings some significant CPI data from the UK, alongside US retail sales. We also get Canadian CPI and the FOMC minute release. Thursday brings Australian employment, and we get Japanese CPI, UK retail sales, and also Canadian retail sales to wrap the week up on Friday. I'm going to wish you all a great trading week. Please do stay safe out there. If you like what you're seeing here, don't forget to hit that like button, and also to subscribe to our YouTube channel, and I'll be back with you with another macro watch next week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.